Welcome. Thank you for lending an ear to the Voice of the Times for Wednesday, July 28, 2021. For today's editorial, Tax Reform One Important Advance Under Duterte. President Rodrigo Duterte's sixth and final State of the Nation address, or SONA, may not have quite been the classy, simple, and modest performance we were told to expect. The president, as usual, followed his own program rather than the one imagined by his communications people. But it certainly was not lacking in substance, both as a review of his 5+ years in office and his objectives for his remaining term and beyond. On taking office, the president frankly admitted that economics was not one of his strengths, but overcame that shortcoming by recruiting a highly competent and effective economic team. Of everything that has been accomplished in the Duterte era, this may be the most important because it resulted in reforms that will have a positive impact far into the future. The Comprehensive Tax Reform Program, or CTRP, is not given as much attention as more visible accomplishments such as infrastructure, but is in our view the best part of the Duterte legacy. In early 2018, the first part of the CTRP, the Tax Reform for Acceleration and Inclusion, or TRAIN Act, was enacted, immediately correcting a personal income tax structure that was about 20 years out of date. Wage earners with taxable annual incomes below 250,000 pesos were exempted from paying personal income tax, while the tax brackets for higher incomes were adjusted to more sensible levels. As a trade-off to maintain the government's tax revenue stream, new taxes were imposed on fuel, cars, and sugar-sweetened beverages, among others. The reforms of the TRAIN Act have been criticized as increasing the financial burden on lower-income people, and this is true to some extent. Value-added and excise taxes do account for a larger proportion of one's income the smaller that income is. However, as a general rule, taxes on what one spends rather than on what is earned encourage savings and investment, which is ultimately more economically productive than consumption and a more logical foundation for a national economy. Without the tax reforms introduced by the TRAIN Act, it is likely the government would not have had the resources and maintain the good credit rating necessary to fund its pandemic response. In turn, those resources would have not been available if not for the substantial overhaul of the Bureau of Internal Revenue's, or BIR, systems and collection processes. Digitalizing much of the government's business was another initiative that was prioritized by the Duterte administration, and it was expressed perhaps most successfully in the BIR, which is now more efficient and user-friendly than ever before. Even in the midst of a pandemic, the BIR has exceeded its revenue collection targets, helped in no small way by the fact that virtually every taxpayer can now easily file his or returns electronically. The second key part of the CTRP that has been implemented is the Corporate Recovery and Tax Incentives for Enterprises, or CREATE Act, which provided some immediate relief for businesses by lowering corporate income taxes from 30% to 25% at once, with gradual adjustments downward to 20% over the next few years. The CREATE Act also streamlined and rationalized the confusing system of fiscal incentives for investors and business locators. The CREATE Act was delayed at least 2 years beyond when it should have been enacted and went through 2 earlier versions before it was passed, and has not been free from contention over some details of its implementation. However, just as with the TRAIN Act, the CREATE reforms properly address the big picture. The Philippines' corporate income tax rate will now be competitive with its regional peers, and the more efficient and relevant package of fiscal incentives will attract more investors without imposing unnecessary costs on the country. It is unfortunate that other parts of the CTRP were not passed, and almost certainly will not be in the little time remaining before the end of President Duterte's term, since the economic team prioritized a total of 5 parts of the CTRP in order of greatest importance and broadest positive impact on the economy. The best parts of the tax reform initiative were implemented. In this, at least President Duterte and his administration have secured themselves a most favorable legacy. And that's the editorial for July 28, 2021. For more news and information, get a copy of the Manila Times on print. Subscribe to its digital edition or log on to www.manilatimes.net. Follow us on Twitter, Facebook, or Instagram. And listen to the Voice of the Times.